Suppose, behind closed doors, the Federal Reserve and other major banks had plans to repurchase a significant amount of XRP. Envision yourself waking up one day to discover that banks have allocated funds at a far greater rate than the current market price for XRP. Someone in a position of influence is supposedly having a private conversation regarding XRP's potential role in the international monetary system. Could XRP be deemed a strategic asset, necessitating its use by all global banks? Assuming that does occur, would they consider purchasing it back to reduce the amount available? Many members of the cryptocurrency community believe that XRP's true value exceeds its current market valuation. Its significance for the future of finance may be demonstrated by a large buyback. To be more specific, why isn't this data being made public? How would the Federal Reserve's plan influence ordinary XRP owners? And what is it? We must ascertain the truth regarding this potential sale, and whether financial institutions are preparing to seize control of a digital asset that is highly valued globally. For a long time, financial experts, Ripple insiders, and crypto enthusiasts have been suggesting the concept of an XRP buyback. The concept of a buyback is simple. Assuming XRP gains significant traction as a global financial asset, large institutions, like governments and central banks, will want to regulate its supply. No central authority is in charge of creating or controlling Bitcoin. Because it uses a distinct consensus log, XRP makes international money transfers quicker and more efficient. Due to its practicality, XRP has been suggested as a potential interim currency to be utilized until the new monetary system is completely operational. In that case, why would financial institutions and the Federal Reserve wish to repurchase XRP? If XRP were to become a significant component of the financial system, according to some analysts, institutions would have to purchase a large amount of it before it became widely used. Increasing one's influence through a buyback is another option. The goal is to have banks, not ordinary individuals, own the majority of the XRP shares. It has a history of application in financial market buybacks, when an entity believes an asset is strategically valuable or undervalued. The current price of XRP may be far below what banks estimate its value to be if this theory is correct. But why is XRP considered so important, and what role does it actually play in banks' future? Find out how it might affect the global financial system. The potential impact of XRP on the financial sector is not up for debate. The cryptocurrency is already gaining prominence as a vital instrument for international trade. Sluggish settlement delays and antiquated technologies characterize traditional banking institutions. In contrast, XRP enables immediate cross-border money transfers for a nominal cost. For this reason, it's an excellent method for financial institutions such as banks, money transfer services, and even central banks to modernize their networks. In order to integrate XRP, Ripple has already collaborated with hundreds of global financial institutions, including large banks and payment providers. Due to its real-time liquidity, XRP has the potential to serve as a bridge currency across other national digital currencies. Worldwide money transfers would be a breeze with this. Major financial institutions and the Federal Reserve are involved. Faster transfer systems that do not rely on the antiquated SWIFT networks will be necessary for banks if digital payments are to replace traditional payment methods globally. Institutional buyers and a potential comeback have been the subject of increasing speculation, since this is an ideal application for XRP. There is an argument that banks could just buy up all the XRP in circulation at a predetermined price if they wanted to control the entire supply. But what would this imply for typical consumers in the event that it materialized? Retailers would have to unload their wares, instead of benefiting from the skyrocketing price. How would XRP holders be impacted by a buyback? Let's take a closer look. It might be a watershed moment for XRP holders if there was a comeback. One positive aspect is that early investors may be able to sell their shares for significantly more money if values surge due to a planned buyback by banks. Some have even proposed setting the buyback price so high that it exceeds the stock's existing market worth. A few hundred to several $1,000s is the range of value for XRPCs. Governments and banks may be willing to pay a premium to manage XRP supply if they consider it a valuable instrument for their finances. On the other hand, a buyback might dilute the influence of tiny owners, making it more difficult for ordinary individuals to hold or trade XRP. Is one way that institutions can achieve full control over the cryptocurrency. This begs the crucial question: should XRP holders sell their tokens now or hold on to them for potential future price increases? Furthermore, would individual purchasers have any input into the specifics of a predetermined buyback price, or would the terms be determined by financial institutions? These are the intriguing and terrifying unknowns surrounding the buyback concept. One thing is certain: if XRP is indeed considered by banks and central banks to be the next financial system's foundation, in order to prevent it from relocating, they will do all that they can. However, the outcome of XRP's situation is most heavily influenced by the law. Let's take a look at the ways in which transparent regulations could facilitate or impede a potential XRP buyout. A key